Hi, my name is Udit and I work in Germany as a finance manager. In today's video, we are going to talk about the parallels between careers and investment journey. Yes, there are a lot of parallels between these two seemingly disconnected fields. Why? Let us try to understand. The first point is that both are governed by the laws of demand and supply in short term. When the economy is buoyant, when the companies are investing in growth, when the situation looks very positive about the future, what happens? The companies go on a hiring spree. More positions are created, more vacancies are out in the market, and the potential employees and the existing employees start demanding more compensation. And this leads to an increase in the wages. Similarly, in the stock markets, when there's a lot of buoyancy in the markets economy, the sentiment is positive and there's a lot of liquidity which is flowing in the system, everyone starts chasing the stocks, and this leads to an inflation in the valuation. In the opposite case, what happens is when the economy is not doing very well, the companies are not investing in future growth, there's a fall in profits, they start cutting down jobs and they start to go on hiring freezes, and this also leads to a decline in the wages and the compensation which is demanded by the employees, and hence people are ready to work for a lower compensation. This principle of demand and supply governs the markets in the short to medium term. Now, if we talk about careers, career is a very long term game. Career is not built in 5 months, 5 days, or even a year or two. Careers are built spanning over decades, wherein we spend our time diligently in learning new skills and honing our existing skills. And as we grow with our skill set, we become more employable, we start demanding more compensation. As we gain more skills, as we hone our existing skills in our journey throughout our careers, we are compensated in line with the skills that we acquire. This is very similar to the stock prices going up in the long run, with the profits and the earnings of the companies catching up towards those valuations. And this leads to a growth in the stocks over a long period of time. And I can very confidently say that this is the single most important determinant of stock prices in the long run. Same is the case with us too. The single most important determinant of our growth in our career is how we develop our skill set and how we hone our existing skills. And this is how we grow in our careers, and similarly, this is how the companies grow in their stock prices. Now, moving to the third point, careers as well as markets are non-linear. It is very easy to say that the stock prices will catch up with the earning growths in the long run and it is going to be a nice smooth sail. Similarly, in careers, it is also very easily said that you keep on working on your skill sets and you will be fairly compensated and you will grow in your career. But unfortunately, life and markets are not linear. What happens is that we go through phases wherein for a very short period of time we experience tremendous growth. And this is in most scenarios followed by a stagnation, a decline, or a period of no or slow growth. And this is where the patience comes in, both in markets as well as careers. Because what has happened here is that your employer has compensated you for the potential output that you're supposed to deliver. And this is determined by the skill sets that you bring to the table. Similarly, in markets, the stock price that a company commands is on the basis of the earnings potential in the future of that company. So, what happens if in the short to medium term, the company goes through a rough phase in earnings growth? Then the stock price either corrects or remains stagnated for a prolonged period of time. Similarly, in careers, If we grow very fast in a very short span of time, then we need to hone our skills to catch up with the valuation that we are commanding in the job market. And this is where patience and diligence comes in as a key skill that we need to practice. So, while we are going through a period of stagnation or decline, we need to understand that this is the period wherein we need to hone our skills, we need to work on ourselves, we need to improve ourselves so that we catch up with the price that we are commanding, and in future we are able to command a higher price in the market. Same goes for our careers as well as stocks. And also, we need to be confident in our skills, we need to be confident in our long term outlook that we have, and also we need to be positive that in the long run everything is going to play out very well, and we navigate these short term fluctuations both in markets as well as our careers to make a successful long term journey. It is not simple, it was never meant to be simple, but how we can enjoy this process, this journey, is by accepting the nature of the journey, which is non-linear in nature. This non-linearity is something that we need to accept and internalize in all our decisions, be it financial or be it career decisions. This is what I wanted to share today related to the similarities between the stock markets and our careers. I hope this insight helps us to see our careers as well as stock markets from a different lens. I would like to end this video with a very simple but very profound tagline that Reliance Industries used to have in their advertisements. I'm not sure that they still do, but this resonates with this philosophy very well, that growth is life. Till the time we are growing, learning, we are winning in life, we are moving ahead in life. This is what gives us the confidence to navigate good and bad situations in life and march ahead. Thank you.